Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Uh, this is Market Pulse midweek for Tuesday, March 21. Hope everybody's doing great. All right, everybody. So let's go ahead and get started. We have a Fed meeting tomorrow, obviously, unless you've been living under a rock, right? Which is going to be really just monumental. I think it's going to be probably the biggest meeting that we've had over a year because of all the obvious things that everybody knows about the banking crisis. Everything got kind of turned topsy-turvy, and now the question is, are they going to? I think they're going to go 25, but more importantly, are they going to continue to fight inflation, or they're going to back off, and so on and so forth. So again, speculation swirling. But as traders, that's all well and good. But as traders, we have to stick to our process. We have to stay disciplined. We have to stay focused. None of that changes, regardless of what all the other stuff goes on. So, in that regard, let's talk about the charts. I am just let me do some housekeeping. I'm going to do another class probably a week from tomorrow. I'll announce it, the subject matter and so forth, starting tomorrow. So look forward to that. It's going to be Wednesday, a week from tomorrow at 4 p.m. Pacific. Okay. Also, sign up for the newsletter. I'm going to make some modifications to the newsletter. And also, if you want to join me for a free 5 days in the morning session, also sign up for that. And anything else, you can contact me at support@transparenttrading-solutions.com. I've been getting a lot of requests lately. So welcome. I welcome your comments, feedback, whatever, in that regard. Okay. All right. So listen, on the let's start with the equity markets. Again, just pure, no judgment, no regardless of what's happening tomorrow. Again, as traders, we just got to stick to the process, enjoy the process, not the outcome and all that good stuff. So we did have a nice rally, which I have to tell you again, I'm not going to rant today, but this whole notion of labeling yourself either a bear or a bull and whatever, and everybody again scratching their heads again, going, why does the market, like today, why is the market up again with all the bank crisis going on and blah blah blah? And if you get into that mode, you're always, and again, this is statistically why most people lose money doing this, right? You cannot do that. You just have to watch your charts. You can't have some kind of strong bias either direction, and so on and so forth. So anyways, that was my little, because I've been getting a lot of, I've been talking to a lot of people lately, and it's the same old. And if you can't change that, you're always going to struggle in this thing. And anyways, all right. So look, we broke above 4K on the futures, and obviously had a really strong rally into the close today in the S&P. Now I've been talking about what we've been doing in our morning sessions is focusing. Obviously, there's a level at 40.55. There's that pivot high from right around 4,100 from last couple of weeks in the S&P. And it's not great looking. So again, in terms of where the S&P goes, there's a chance we could go all the way up to 4,200, especially if they pause tomorrow, whatever. Now, going into the Fed meeting, you're probably going to get a lot of volatility. You're going to get a lot of whipsaw. But ultimately, whatever direction is going to happen, it's going to happen, post all the, kind of knee-jerk reactions that typically happen after a Fed meeting. And so on. As some of you guys know, typically you don't want to get involved in that until after, or you want to give yourself enough distance away from current price so that whatever reaction happens after all the gyrations, after all of the whipsaw, that it, for instance, if you're going to short the market, you want to give yourself 50, 60 points of leeway, put a limit order where if you see a level, or conversely on the downside. Now, I'm not seeing a whole lot of great levels, I have to tell you, on the S&P. Until we get much higher. In fact, on the, there's a bunch of resistance clearly at 4180. You can see there's a bunch of pivots right around 4184. There's, the next level I'm looking at, which we've had forever, 42, above 4200, about 4220. There's a gap. That thing's been sitting out there forever, and we may get there. I mean, you never, you just never say never with these markets, right? Could we get up there? Absolutely. So that's really the only level I'm looking at, unless we get, some pullbacks. That's a short, by the way. Pullback levels, I'm looking at 3766, and there's also some minor levels on the breakout right around 4K. That always seems to happen, the mean reversion, where you get a pullback where we broke out from. That seems to be working pretty good right now. So that's kind of what I'm looking at in the S&P. Kind of, I would say, I would summarize the S&P right now in, clearly we still are range trading. That hasn't changed. I don't think that's going to change, really. What I mean by that is we keep swinging back and forth. And again, kind of to follow up on what I just said, if you chase this market either up or down, you're always going to get whacked right now. In other words, if you get really bullish now that the market's starting to head back up again, and you chase it, you're going to get burned. If you get too bearish on the downside after the banking crisis hit, you're going to get burned there too. So that's not the way to do it. You still have to look at this as a range trading market. Buy low, sell high, wait till, and again, sentiment is getting, the VIX is that's one thing I've been talking about, kind of pegging that. It's kind of in no man's land, sitting above 20. If it gets down into I was talking to you guys when it got down to like 18, that was the it was the last time we peaked and went down a couple hundred points, and now we're right back up again. So, you got to monitor sentiment as well. One thing that's different, I wrote about this over the weekend, is in prior Fed meetings or CPI releases or non-farm payrolls or whatever, there usually was a consensus. In other words, everybody was kind of positioned heavily long or short, usually on the wrong side, of course, right? I don't know if you noticed that. That's not the case this go around tomorrow, right? Because there's so much speculation and about with what happened with the banks, that kind of, again, kind of changed the dynamic. But so that's why I think it's going to be interesting to see, because we don't have that kind of lopsided positioning that we typically have in front of a Fed meeting. And I get it, and if you think about it, the charts actually are reflecting that, because we're kind of in no man's land in regards to that. So to summarize here, I'm looking at 4,200, above 4,200 to go short. Now, again, could you short before that? Of course. There's a bunch of pivots and so forth. If you trade off pivots and support and resistance, there's levels before that. And so I would just call it no man's land. Now, let's move on to the NASDAQ. NASDAQ also had a really nice rally. NASDAQ pullbacks down to about 12,400 would be okay. And the next level I'm looking at is 13,130 on the upside. We missed, we had a level down at 11,767 to buy NASDAQ. That came up a little bit shy, and you can see, and we know that the NASDAQ has just been outperforming. On a side note, I am trying to get short some semis. AMD had a really nice run up. That actually pulled back hard today. Didn't quite get to our level, so we're also looking at that. We're also trying to get long JPM. That obviously came really close as well, and then turned up, and so on and so forth. So those are the kind of trades we're looking at right now. going into the Fed meeting. Why the Dow actually did break out of a range here. We had a range going between 31,665 and 32,500. We kind of broke out above that, kind of stalling out. And then the Russell looks like it's got some resistance around 1825. There are some really good shorting levels in the Russell up around 1900 for some of you guys to look at. Again, if you want to see the specific levels, come in and spend even a couple of days with me. I go through these levels every single morning, and you guys can take a look. We did have a really nice trade. I think I was actually talking about this on Friday, where I was talking about shorting gold. So we actually took a short on gold on Sunday. I was with our elite members on Sunday. We shorted gold at 1204.60. I'm sorry, 2004.60. Right. That was our entry, and we actually just hit our target today at 1948. So that was a really nice trade for all our members. And I did, if you go back and look at Friday, if you look at Friday, I did mention, that I was kind of looking at shorting gold. So that was a nice trade that's completed. Obviously, not all trades work out that well, but we'll get into that in a second. What's the next move on gold? I'll get into that in a minute. Bonds, Robert. I'll let me answer your question in a minute. Thank you for that. On the 10-year, which is really the main focus right now, very, very big whippy action. As you know, been really, unless you're really super nimble trading these bond market, that's why I'm actually just looking at, I'm trading more TLT than anything else in regards to the bond market. And in fact, we still have some levels out there that we're trying to get long TLT with. And we had a false breakout in the 10-year about 116, and then gave it all back. That implies that we probably fall all the way back down, possibly to maybe 112.06 is the next level I'm looking at on the 10-year. So again, if you bought that breakout in the 10-year, that actually happened Sunday night. All of this was happening when gold rallied, bonds. You remember we actually, that was with the Credit Suisse situation going on Sunday night. All of that happened in the after hours. So, but big whippy action in the bond market. Clearly, tomorrow is going to be another impactful day in regards to the bonds. The 2-year, also huge moves in the 2-year. Looking at some levels to buy down in the 102 area in the 2-year. If you've ever traded the 2-year, that's pretty good as well. But clearly, and again, you can see those charts, the big kind of whippy, huge moves, very erratic in terms of the charts. You have these spikes, you take out the pivots, you come down, and so on and so forth. So it's been kind of a no touch for us just because of the erratic type of trading, just the big whippy action on that thing. Robert, are you looking at dividend paying stocks to fight inflation? Great question. Robert, I personally, I'm not a big dividend. I'm not a big proponent of dividend stocks. And here's why. If you're getting 2-3% on a dividend in a stock, that's great. However, if that stock in this environment, if you have a stock that falls 10, 15, 20%, which obviously can happen with the kind of volatility we've been experiencing, what's the point of having a 2%, 3% dividend when when your stock is going down 10, 20%? I would rather, and you can contact me, Robert, and we can have a discussion offline at support@Transparent Trading Solution. Go to the website. The links are below. I would rather have you maybe do some options in lieu of dividends. In other words, buy buy some stock, maybe sell some calls against it, maybe do some puts to generate income at critical levels and so forth. I do have people doing that. Does that make sense, Robert? Because the dividends also, by the way, the dividends can also go away, as you know. I mean, some of these banks are paying some great dividends, but I can tell you they're probably going to cut their dividends because of what's going on. And then what happens when you cut the dividend, then you suffer 10-15% decline in the stock. So I would rather have you buy shares like JPM and then sell calls against it. Like we've been if you look at the chart of JPM, for example, that's it's a great little from 100 to 140. In fact, if you sold calls at when the stock was around 144, you're doing great with that type of thing. Okay, Robert, does that make sense? All right. Hope that answers your question. Again, contact me offline, my support staff, and we can get on a call and I can discuss that with you further if you are so inclined. Okay. All right. Dollar. Let's move on with the dollar. The dollar been seeing some weakness, and look at 102.66. There's a support area that's actually also, in fact, where we broke out from. So you notice we were hanging out there in January, kind of banging around there. I did give you guys that 100 level. We cleared out of that, and then we pulled back twice once we broke out above 102.66, and then took off and then came up to the resistance, which I've been giving you guys too, 105, and now we're back kind of in no man's land in the dollar. That 102.66 is going to be really interesting, especially tomorrow going into the Fed. Also, that has to do with I'm looking to get short Canada, and Swissy has the Swiss, as you know, have been in the headlines lately with what's going on with the merger, forced merger of Credit Suisse and UB. I don't know if you guys know what UBS stands for, United Bank of Switzerland. So two major Swiss banks got together. They have also, incidentally, they have a rate announcement in Switzerland on Thursday morning. And so if you look at the Swiss franc, it's been coiling up here. It's been in a range, and it's got some really nice levels up top, right around the 1.10046, 1.10046. And then there's got a gap. There's like a rollover gap to fill and so forth. So that's something I'm going to be looking at with my members going into Thursday's Swiss. We had actually 1.1141. You can see that was a great looking level. We had a nice pullback out of that. And then peso also has a gap at 54.50, which I'm looking at. Been in a big range, kind of came down to that level I mentioned to you guys the other day, 51, and kind of just been back and bouncing around that thing. So peso, Swissy, Canada, and also yen. Still interested in the yen. Yen has a level around 78.17. So there's some nice currency plays going on right now, which hadn't really been around. But now with the movement that we're getting lately, it's creating some really nice, uncovering some really nice opportunities. Okay. All right. Now, again, if you look at gold, everybody pull up gold. I did mention that I was looking at over 2,000 on Friday. Again, you can watch the recording. So again, we did short that. I put that out for my members on Sunday evening after we got done with our session. 20.0460 was the entry, and we just basically covered that this morning. There are some levels coming up here. There's a big old ugly level right around 1920. But again, going into the Fed tomorrow, we're going to kind of leave it alone and see what happens with that and go from there. We're also long NEM, which is the Newmont Mining. We bought that around 42 with some calls. so forth. So that's actually still okay. I'm kind of, I typically, when you do some options on the, NEM, or, I'm also long calls in oil, UCO calls. I think I mentioned that on Friday. Looks like oil wants to break out above 70. So those would be pretty good. We can trade around that. So for instance, even though I'm long calls UCO, that doesn't mean I can't short, oil futures on a short-term basis. So that's kind of where we're at. We'll see what happens with gold, and gold is acting as a safe haven. If you look at gold, it peaked right. If you look at your charts from Sunday, this is really, and I kind of went through this with my members. The absolute high in gold, which was like 2014-ish, you can look at that big spike in gold on Sunday night. That literally coincided with the S&P bottoming at 3,900. The 10-year, remember I just mentioned the 10-year had a false breakout. That's the high on the 10-year, and so on and so forth. So it's really interesting. The algorithms were busy at work on Sunday through all that. But in any event, we'll see what happens and see if that kind of dynamic continues. In other words, you can see that as stocks have rallied since Sunday for the last couple of days, even going into the close today, gold has dropped like crazy. And so let's see if that continues. In other words, so in a nutshell, what's going to happen is if we get a further rally in the stock market tomorrow for whatever reason, you probably see gold dropping all the way down to like 1900, 18. There's a gap around 1877. So that would even be more bearish for gold, but we'll see what happens there. Silver, kind of a little different dynamic, kind of just pausing here. We got some levels up around the 23.5. Nothing really, and copper did hold that 383, and it's going back up to like $4. So it's kind of just been meandering. Other than that, and energy, we just talked about 70 clear resistance on oil. We are long UCO calls. I don't know if you know what UCO is. That's the leveraged ETF, oil ultra long. Okay. Nat gas, we're out of boil. And we're going to focus on the futures market. So we took a small loss on that. You can see it hung right in around 215, 210, had a nice pop. Again, we've had this before. Who knows what, we're going to focus more on the future side now. There's still, lots of chop in nat gas, and it's going to be interesting if this is actually, at some point it's going to bottom, but I don't see it moving really past $3-4 at this point, unless something really dramatic happens on the weather front and so forth. So just going to be focused on the future side on that. Lastly, everybody, grains. So in fact, I just got off with my members here. We had a big drop. If you watch the wheat actually came up to 710. Been talking about wheat quite a bit. Dropped off pretty sharply today, and then there's some levels coming down here around the 650. In the 650s, there's actually a couple of levels on a level, so those would be interesting to see on wheat, and nothing really going on. Soybeans just chopping around. Soy meal, these I love the grain markets. They usually have some great movement. The only two I'm really kind of focused on right now are corn. We try to get long corn. That didn't get far enough down, but again, right around in the mid to high sixes is some really nice levels on corn. We're kind of just chopping around right now at the moment. So, okay. All right, everybody. Again, I've got a class coming up on Wednesday. I'll post it. If you hit the link, we'll get you notifications when that class is coming. I'll start tweeting about it tomorrow. That's going to be a week from tomorrow. We got the Fed meeting. If you want to join me for a free, some free sessions, whatever. If you want to contact me, support@transparenttrading.solutions.com. Hit the website. If not, have a great, be careful tomorrow. You're going to be tons of volatility, but obviously also great opportunities. So um, that's going to do it for me today. Have a great rest of your week. I'll see you guys on Friday. Take care, everybody. Have a great day.